At the zenith of its power, the British Empire spanned the globe, a colossal dominion upon which the sun, it was famously said, never set. It controlled nearly a quarter of the world's land and a fifth of its population. The pound sterling was the undisputed king of global finance, and London was the financial capital of the world. Yet this seemingly invincible empire, the richest in human history, was brought to its knees not by a climactic military defeat, but by a catastrophic financial mistake, a single trillion-dollar blunder that bled it dry and redrew the map of global power forever. This is the hidden story of how the British Empire's own ambition and greed engineered its spectacular economic downfall. This documentary peels back the layers of pomp and circumstance to reveal the fragile economic foundations upon which the empire was built. We will explore the chain of events, from the heights of colonial exploitation to the crushing weight of debt-fueled wars that led to its collapse. We'll uncover how a single strategic error, made under the immense pressure of global conflict, set in motion a domino effect that shattered British dominance. This isn't just a tale of historical mismanagement, it is a stark warning. The very same economic traps that ensnared the world's greatest empire are re-emerging today, threatening the stability of modern superpowers. To understand Britain's fall, we must first appreciate the sheer scale of its rise. By the 19th century, the British Empire had perfected a system of global economic extraction. Colonies were not partners, they were assets to be stripped. India, the jewel in the crown, was deindustrialized, its legendary textile industry systematically dismantled to make way for British-made goods from Manchester's mills. Raw materials like cotton, jute, and tea were shipped to Britain at low prices, processed and sold back to the colonies and the world at a significant markup. This colonial model, replicated across Africa, Asia, and the Americas, funneled unimaginable wealth into the heart of the empire. London became the world's bank, its financial institutions underwriting global trade, insurance, and investment, all conducted in the mighty pound sterling. This system created an illusion of permanent supremacy. The pound was the global reserve currency, as stable and reliable as gold itself. In fact, it was backed by gold. The Bank of England held vast reserves, and the City of London dictated the flow of capital across continents. Britain wasn't just a military superpower, it was the world's creditor, its investor, and its factory floor. But this intricate financial machine had a critical vulnerability. Its entire operation depended on peace and uninterrupted trade. The empire's wealth was built on a globalized system it had created, and any major disruption to that system could prove fatal. The dark clouds of war gathering over Europe in the early 20th century were not just a threat to Britain as soldiers, but a mortal danger to its economic soul. The outbreak of the First World War in 1914 was the first body blow. The conflict was unlike any before it, a brutal war of attrition that consumed men and material at an insatiable rate. To fund the war effort, Britain was forced to liquidate its overseas investments, selling off railways in America and assets across the globe that had taken generations to accumulate. But even this was not enough. The government began borrowing on an unprecedented scale, primarily from the United States, which remained neutral for the first 3 years of the war. Wall Street, once a junior partner to London, became Britain's primary creditor. By 1918, Britain had transformed from the world's biggest lender into its biggest debtor. The war cost Britain nearly a third of its national wealth, and the pound sterling, though still standing, was severely weakened. After the war, a wounded Britain was desperate to reclaim its former glory. The political establishment believed that restoring the pound to its pre-war value was the key to re-establishing British prestige and financial dominance. This led to the single greatest financial mistake in the empire's history. In 1925, the Chancellor of the Exchequer, a man named Winston Churchill, made the fateful decision to return Britain to the gold standard at its pre-war parity of 4.86 to the pound. On the surface, it seemed like a bold move to restore confidence. In reality, it was an act of economic suicide. The British economy was a shadow of its former self, its industries outdated, and its trade balance in tatters. Repegging the pound at such an artificially high rate made British exports prohibitively expensive on the global market. The consequences were immediate and catastrophic. British coal, steel, and textiles could no longer compete. Foreign buyers turned to cheaper alternatives, and British industries collapsed. This triggered mass unemployment and social unrest, culminating in the 1926 general strike. To defend the overvalued pound, the Bank of England had to maintain high interest rates, which choked off investment and deepened the economic depression. The empire was being sacrificed on the altar of a symbolic exchange rate. Churchill himself would later call this the biggest blunder of his life. The decision to return to gold at the pre-war rate was the trillion-dollar mistake, a self-inflicted wound from which the British economy would never fully recover. It was an act of pure hubris, a belief that the world would bend to Britain's will, when in fact the economic fundamentals had irrevocably shifted. While Britain was strangling its own economy, a new financial power was rising across the Atlantic. The United States had emerged from the First World War as the world's undisputed economic leader. Its factories had supplied the Allies, its banks had financed their victory, and its treasury now held the majority of the world's gold. The dollar was rapidly displacing the pound as the currency of choice for international trade. The financial gravity of the world had shifted from London to New York. The Great Depression, triggered by the Wall Street crash of 1929, was the final nail in the coffin for Britain's gold standard. With its economy in freefall and its gold reserves hemorrhaging, Britain was forced to abandon the gold standard in 1931. The pound plummeted, and the myth of British financial invincibility was shattered for good. The Second World War completed the process that the First had started. Britain once again had to finance a total war, but this time it was already broke. The nation sold off the last of its valuable overseas assets and borrowed even more heavily from the United States through the Lend-Lease program. The deals that destroyed its global supremacy were signed not in surrender, but in desperation. The Lend-Lease agreement, while essential for survival, effectively mortgaged the future of the British Empire to Washington. Another crucial agreement, the 1944 Bretton Woods Conference, formalized the New World Order. It established the U.S. dollar convertible to gold as the world's primary reserve currency and created the International Monetary Fund and the World Bank, institutions dominated by the United States. The pound sterling was relegated to a secondary role. The torch had officially been passed. By the end of the war in 1945, Britain was victorious but utterly bankrupted. The nation was saddled with a debt equivalent to over 250% of its GDP. It simply no longer had the financial resources to police its vast empire. One by one, colonies from India to Africa and the Caribbean demanded and won their independence. The empire was dismantled not because Britain lost the will to rule, but because it had lost the money to do so. The Suez Crisis of 1956 was the final, humiliating confirmation of this new reality. When Britain, France, and Israel invaded Egypt, a furious U.S. administration used its financial leverage, threatening to sell its holdings of pound sterling and trigger a collapse of the British currency. Britain was forced into a humiliating withdrawal. The message was clear. Britain was now a junior partner, unable to act without a green light from Washington. The empire was well and truly over. This story of imperial collapse is not just a relic of the past. It is a chillingly relevant warning for the present. The economic mistakes that brought down the British Empire are being repeated today by the world's leading powers. Look at the United States, a nation that has transitioned from the world's largest creditor to its largest debtor, funding its deficits by borrowing from economic rivals like China. Its military overstretch across the globe mirrors Britain's expensive imperial policing, a costly burden sustained by ever-increasing debt. The dollar's status as the world reserve currency, much like the pound's before it, is taken for granted. even as its foundations are eroded by inflation and geopolitical challenges. In Europe, nations grapple with high debt levels and economic stagnation, reminiscent of Britain's interwar decline. The allure of maintaining a strong symbolic currency, the euro, sometimes comes at the cost of painful economic adjustments for member states, echoing Churchill's disastrous return to the gold standard. We are witnessing the same patterns: over-reliance on debt, the hollowing out of industrial bases, and a political hubris that ignores shifting economic fundamentals. The world is once again at a tipping point, where the financial dominance of the West is no longer guaranteed. The same forces of debt, deindustrialization, and strategic overreach that quietly bankrupted the richest empire in history are at play right now. The downfall of the British Empire shows how quickly and silently a global power can unravel when its economic foundations give way. This isn't just history, it's a warning, because the same economic traps that ended one empire are being set again, and the question is no longer if they will be sprung, but when. Like, share, and subscribe to this channel for more content.